Hey everybody, hope everyone's doing wonderfully well today. Joined by Ben Cowen, and it's awesome to be back with you for another episode of the No Shill Zone as we dissect data and look at charts and all that fun stuff. How you doing, buddy?
Pretty good. How's it going on your end?
Good, man. Believe it or not, I had a 103 fever last night, but
Oh,
that
wow.
doesn't mean that I'm not here to do the No Shill Zone. There's you just got to push through it and get stuff done.
Well, speaking of 103, what do you think's going on with the US dollar currency index here?
Oh my gosh, let's take a look right now. Let's get right into the action on the US dollar. I'm curious about your thoughts, actually.
I know.
If we flip up the US dollar, the Dixie, right? So are we going to see a breakdown in the dollar or are we going to see a breakout?
This is something I've wrestled with for a long time. So I was very bullish last year on the dollar, and I've been sort of under the impression that the dollar will likely break out back up to the upside at some point later on this year. The reason I think, and I don't know if that agrees, that might not align with your views. I'm not really sure. But the
Mhm.
reason I've thought that is because my sort of assumption was that the US economy would be more resilient than sort of its counterparts.
Mm,
And it would, interest rate, like the US could afford to stay, keep interest rates higher for longer than some of the, places in Europe, just because I think the US economy is quite a bit stronger. But I do recognize that at least in the short term, it has been putting in a series of lower highs. It
yeah.
has been putting in a series of lower highs. And so I would say this, if it goes back down to say that 100 range, then perhaps that would be a case for it to ultimately break down. But there's also this idea as well that I think a lot of times people assume that if the dollar's going up, then crypto's going down, and if the dollar's going down, then crypto's going up. But there are periods in history, especially in recessions, where you see the dollar roll over and go down, and risk assets also go down. It's kind of like
Yeah.
everything goes down together. So I could see it. I really could see the narrative both ways. So maybe it pops up and then rolls over into a recession. I don't know. What do you
Well,
think?
I think one of the interesting things that we could real recognize is that globally the economic data has been ridiculously bad, right? I mean, Germany recently, the UK with inflation, Japan with inflation. We know China's struggling, their economy's struggling. And so what's kind of intriguing to me is that the dollar's not getting a bigger bid,
Yeah.
considering that the economic data here has been really actually pretty good comparatively. So it's almost like, okay, so if that's not giving the dollar a bid, does that potentially mean that when the US economy starts to weaken, which, whether it's in 3 months, 6 months, a year, at some point it will, does that then mean do we have a bigger rollover? And again, it is kind of interesting with the chatter about de-dollarization. Janet Yellen recently saying that people should actually diversify away from US dollars a little bit because it probably won't be the only currency out there. So yeah, it's kind of interesting because again, yeah, the economic data globally has been really, really weak. You'd assume the dollar would be ripping right now.
Right. Yeah. It hasn't
Although
so far.
yeah, although I will say this is that we know the US dollar does well when there's panic, right? When there's
Right.
panic. And if you look at the VIX, and in fact I'll pop up the VIX here, it's anything but panic. And I mean you have riots in France right now, you have, there's lots of stuff that you could argue, hey, this should be causing some sort of move in the volatility index and fear, and it's just not. And I was curious about your thoughts on that. I mean, why when we have the potential for higher rates from the Fed said maybe two more rate hikes this year, markets didn't flinch. We see riots in France, granted that's probably not, you had that potential coup in Russia, markets didn't flinch, granted it was pretty much over, but why is that?
Yeah. I think my best understanding of it is that normally when we get into this phase of the cycle, the market loves just climbing the wall of worry
Mm,
for a long period of time. And also too, I mean, some of the good economic data could have been priced in long ago. It's hard to know. I mean, the market prices things in 6 months in advance sometimes, or if not longer. But one of the things that we've seen before in business cycles is that during the rate hiking cycle, right, especially as you get further into it, the market loves climbing the wall of worry until the labor market goes, right? And we've talked a little bit about initial claims, continued claims, and how they have been inching up recently. I think last week's print was actually just a bit lower. But I think that is one of the things we're looking at. I think the only other real thing, I mean, there's always geopolitical events, right, that could cause a panic and very, very quickly, but it's hard to plan for those. I think the other thing, and I'd like to get your thought on this too, is what if we get any type of reacceleration of inflation. I wonder if that is a possibility. And the reason I bring that up, I still have been in the camp, right, that we see disinflation as opposed to hyperinflation. But even in a disinflationary process, it's not necessarily linear, right? It can go down for a while, then go up for a few months, and then keep going down. With things like oil, oil topped out last summer, right? Like June of 2022, I believe. So if we think about like the year over year percentage change of some of these things that have been acting as a headwind for inflation, as we get further into the year, those headwinds might become tailwinds, and the year over year change might not be as high or as much as it once was. So do you think that could lead to any type of resurgence in inflation?
Yeah, so one of the things that's kind of caught my eye with that thought process, and it is something that's kind of perking my ears up a little bit, is that we've seen, prices continually decline, but now over the last 6 months or 8 months, the stock market has started to reaccelerate to the upside. We know that we're not that far off of the all-time highs now, and tech stocks are going nuts. We've seen all that. And then also you can look at like Japan's recent data on inflation, and that started to almost uptick a little bit, as well as the UK. So it seems like there's little pockets around the globe where you're starting to see that. And it does make me wonder, with the stock market going up. In fact, the other thing to mention too is housing has started to uptick a little bit again as well. And again, certainly we did not have you wouldn't call what happened in housing a correction. I think maybe prices went down 5%. It was like a pullback.
Yeah, I mean, if you look at the indices, some of these housing prices have actually gone back up and put in new local highs, which is kind of interesting considering that we're now looking at 7% rates. Like if you just look at my screen here, you can see that this is the purchase only house price index for the United States. It's gone back up. It's put in new local highs as compared to 2022. If you look at the Zillow Home Value Index, it hasn't, I don't think it's put in new highs yet, but it has made a brief move back up to the upside. And so I do wonder, with the markets having gone up a lot over the last 6 months, if that could lead to the wealth effect, right? Where people just feel richer and they spend more, thus sort of exacerbating inflation and making the Fed's job even harder. It's sort of like a game of chicken, right? Like the Fed says we need to get inflation under control, but it's like they don't do just enough to actually bring it back down. They've been one step behind for a while, at least with core inflation. I mean, headline inflation has come down, but core inflation has basically been at 5% for the entire year.
Yeah. And one of the charts I want to show here is mortgage originations by age. And again, the age is almost irrelevant to me. I'm just more focusing on massive amount of mortgages taken here, which was good because interest rates were really, really low. But one of the things, and this is always the rebuttal I get. Well, if people got these loans at 3%, they're not walking away from them. But at the same time, I think people aren't taking into account the fact that inflation has skyrocketed, right? So you have to look at what these people now are paying for food, energy, all these other things, in addition to their home price or their mortgage payment. You also talk about if the labor market starts to crack. I mean, how much of this comes back to roost? And do we see a wave of people saying, yeah, well, I took a mortgage at 3%, but if you can't pay your 3% mortgage anyways, what ends up happening? I mean, what are your thoughts on the housing market in that respect?
Well, I think it's more so people move sometimes because they have to, right? It's maybe they get a new job in a new city and that new job doesn't allow them to work from home. Maybe they get married and move away and, they want to buy a new house to, maybe raise a family in. There's all sorts of reasons why people might move, but I mean, certainly getting laid off is got to be up there with one of the top reasons why someone might actually sell their home. It's not so they can go buy a new home. It's maybe because they want to become a renter and they no longer can afford, the expenses of a home. I mean, honestly, like I am not very well versed in the real estate market. I have tried to learn a little bit more about it over the last 12 months or so, because I'd like to get into the real estate market at some point in my 30s. But yeah, I think that what I've seen with the real estate market is that it remains extremely resilient. And I would expect it to eventually roll over. But honestly, like I have no idea how long that could take. Even if you look back at the financial crisis, right, where real estate prices dropped, a lot of them didn't bottom out until like 4 or 5 years later. because the cycle in real estate is just so slow. I mean, you get everything that comes onto the market in the spring, and then the inventories, go up and whatnot. But then as you get later on in the year, things start to fade. I can't help but feel that any type of correction in the real estate market would probably take 4 or 5 years to play out.
No, I think you're right on that. I definitely think you're right in terms of the real estate market takes a long time to kind of play out. But it is interesting to see that home prices did downtick. I follow like my Zillow house, like the value of it on Zillow, and then it was downticking, and now it's starting to move right back up. So yeah, it's an interesting thought. Now, turning our attention to crypto, which I'm sure a lot of people here are interested in. What are your thoughts about Bitcoin, Ethereum? If anything, I've seen like a little bit of an uptick in like Polygon is almost, hitting a level here.
Yeah. So, we talked about a little bit about this last week, I think. In fact, I think it was you that said Ethereum was looking like it was in some type of bullish consolidation when it was around 1900. Yeah. And actually, it's now gone up to almost 2000. It's 1967. Earlier today, it was 1974. One of the things I've thought about as well with the altcoin market in general, so referencing like Polygon and Cardano and Solana, is that they tend to, when they're moving down, they can often move back up to their 20-week SMA or their 21-week EMA, right? We've seen that many, many times. And in fact, you'll notice that it was actually last year where the altcoin market sort of rallied back up to this band. Same thing sort of going on right now today, right? So you have Bitcoin bouncing off of the band, but you have total 3 potentially just bouncing back up to it to potentially get rejected, right? Now, I wonder, I think the idea of, well, how does it actually get rejected if Bitcoin's going up? Well, in the short term, we know that when Bitcoin moves, like if Bitcoin were to make an aggressive move higher, the altcoin market could sit still for a couple of weeks and do absolutely nothing. Because one of the things that I can't, I keep wrapping my head around is how Bitcoin is up 2x off the lows, whereas total 3 is barely off the lows, right? Yeah. Barely off the lows. So the altcoin market, I think, has just continued to bleed back to Bitcoin. So then what brings the altcoin market back down? What could lead it to a rejection off its 20-week SMA? Well, one of the things to consider, and again, N equals 3, it's not necessarily something to take to the bank. They're not going to cash it in. But oftentimes around the middle part of the year, you will see the crypto market roll back the other way. So like in 2011, the yearly high in the pre-halving year was found on day 161. In 2019, the yearly high was found on day 177. In 2015, it was a local high before a double bottom was found on day 193. So far, the high this year has been found on, I believe, like day 178, and we're currently on day 185. Or 184. So I think that there is this idea of seasonality coming back into play, especially as we get later on into July, August. We know September tends to be a risk-off month as well. Actually, you could even look at monthly returns for Bitcoin and see that September is on average basically the only month that's red. Yeah. August is also red, but it's very, very slight. September just tends to be red. So I think we are coming into that seasonality. So you could see, and again, you talked about this, I believe 2 or 3 weeks ago, I think, with some short-term altcoin plays, thinking that they were oversold here in the short term, they could get a bounce, but that doesn't mean that the pain is ultimately over.
No, yeah, I don't, for sure it's just short-term trades. I got a little Matic right now, a little Cardano, kind of same thing where these are just, you can see with Matic here, it's peaking above this same resistance line. And then there's a target here. You have this down sloping trend line here and this flat one right here. So upside for me, 74 cents. But again, from the lows, that's actually a really good move. That's a 50% move off the lows. But in the scheme of what this has done, this is still like, it's gotten crushed. And I think investors, there's this common kind of thought process with investors where it's like the cheaper it is, the better value it must be. And I do think people need to recognize that that's not always the case. You can play them for bounces, but valuation will have to figure itself out as we get regulation in here. And to be honest, it's very hard to figure out what the valuation of a Matic or a Cardano would be. If I flip just to the Cardano chart, I'll show you guys here. Bear with me as I bring that up. So basically, Cardano still hasn't broken out. Matic's starting to peak above the level here. But you can see that, again, Cardano is still up into this resistance, which is right around 30 cents. If it gets through 30 cents, you should head to about 33 cents, that longer-term down-sloping trend line. So yeah, it's kind of interesting to view. And again, I'm a much shorter-term trader, so just kind of taking advantage of these little moves and so forth.
Yeah, it's interesting. If you follow the 20-week SMA and the 21-week EMA for ADA USD, you can see that it's actually coming down right into that range that you mentioned as well, right? I mean, like right now it ranges from 34 cents to 35 cents. But I mean, you can imagine sort of as it slowly goes higher, right? If it continues this move, that could come into that 33 to 34 cents area. So it's an interesting, an interesting dilemma here for the altcoin market. Like they can get these bounces when they get oversold, but as history shows us, that doesn't necessarily mean that the pain is over for them. What is
Yeah.
your view here on the dominance? Because we talked about a lot about the dominance, and I've been quite bullish on it for a long time. But this last week, we've had a massive pullback from 52 to 51%, and I'm curious as to what you think. And my thought process is that it's just a stochastic process. But do you think that it's worthwhile to take note of this pullback?
Yeah, I mean, for me at least, to be honest, I think Bitcoin dominance is still going higher. I know you're in the same thought process of that, and I think what investors need to recognize is that last week we got the SEC to say that the Bitcoin ETF filings for the spot were inadequate, and so just naturally that's going to make Bitcoin investors a little bit more hesitant. And then I also think you have a lot of speculation. I mean, just going back to the stock market and tying the stock market in right now, the stock market has been so strong, like every day floating up, floating up, floating up, that eventually what people do is when everything like you're looking at some of these stocks that have just gone parabolic, they start to look for what hasn't run. And so I think there's just this natural thing of saying, oh, well, these altcoins are so low, I'm just going to give it a shot, which just creates that little bit of a bounce. So you have the negative of Bitcoin with the SEC, even though it wasn't that big of a deal, saying that the ETFs were inadequate. And then you have this kind of risk on kind of thought process where you're then pushing the alts up a little bit. So at least for me, that's kind of where I am at.
Yeah, and I keep thinking too, if Bitcoin were to, I mean, this is the Bitcoin dominance has been just bouncing off the 100-day SMA basically since for the entire year or more. And what's interesting is how it'll move up and then sort of go down sideways with a slightly bearish bias into the 100-day and then sort of bounce back up again. We've seen this play out, multiple times now. And I'm not really sure if this is the start of another consolidation period like we've seen before, or if it's just more of a very temporary thing. It'd be interesting because I talked before about how whatever Bitcoin dominance is doing going into September, it normally turns back around the other way. I've been under the assumption that dominance would go up into September and then it might turn back around the other way. But what happens if it just fades here slowly for a few months and then starts to go back up once you get to that September timeframe, which is only 2 months away? It's only a couple months away. So yeah, that'd be something interesting to think about as well, especially if the altcoin market continues to show any type of resilience here over the short term. But if Bitcoin makes a move higher, I believe you were talking about, I mean, like if this is some type of bullish consolidation here at these range highs, if it breaks out, I don't think you wait until September to see the dominance go higher. I think that the dominance goes higher if Bitcoin USD breaks out. Like if Bitcoin were to break to 35K, I think you're looking at the dominance at like 54 or 55%.
Yeah, no, I agree with you on that one. Absolutely. And I see someone in the chat just saying, was the Gary Gensler resigning news fake? And the answer is yes. At this point, there's absolutely no doubt about it. I saw the same things on Twitter the last 24 hours about him resigning. But if you look at who broke the news, it was like crypto news, cryptoalerts.com. Like it wasn't a reputable source. And then just for everyone out there, one of the things I do, so anytime I hear a rumor and I want to know if it's true, I go look at the underlying asset. And the fact was that Bitcoin yesterday barely budged. If that news was true, smart money would have known it even before we heard about it, and price would have gone nuts. So I always remind people is like there's a lot of crap on Twitter out there. You got to be really careful, but always go back to price action. You're never going to be the first one to hear the news. I'm never the first one to hear the news. Smart money knows way before us. So if price isn't moving when you take a look, then it's not true.
Right. Once we know about it, the market priced it in long ago is the general idea. What is I'm curious because this has been sort of talked about a lot recently is Litecoin. What's your technical view on Litecoin? I think the reason it's sort of making its rounds right now is because the halving for Litecoin is in about 2 months.
Yeah.
So from a technical perspective, what are you looking at with Litecoin USD?
Yeah, so with Litecoin, I mean, amazing move, and again, I think partially it's the halving, and then also partially it's probably one of the few other coins that's classified in the Bitcoin realm of not being a security, but in that kind of same commodity-ish area. In terms of the move up, this is the daily chart, and we can see it went right up into this resistance level, which is a pivot from right here. For one, I think also, let me just see here. I want to draw another trend line from this low here to this high. Yeah, you can see. So there's a confluence of resistance levels up in this 112 level. So once you make a move like this, for a technical trader, you never want to chase it, number one. Number two, it needs to digest the move. So you're essentially looking for a bullish consolidation move, which would be kind of like a 45 to 90 degree angle. Kind of like what we were talking about with Bitcoin dominance maybe happening, that consolidation where it had a big run. Now it needs to kind of digest the move before it can make that next move up. So amazing move on Litecoin. I mean, I don't know if you have any insights into that. Like would this be something that you would be a buyer on a pullback, or you're kind of like, nah, I'm sticking to Bitcoin, Ethereum, and these?
Yeah, I mean, so like I've had this chart on my sort of watch list for basically all year long. And the reason is because I remember in 2019, I saw Litecoin rally. And in 2015, I saw Litecoin rally. And in both cases, I got so optimistic and was thinking like, all right, this is going to be great. And both times the rally ended before the yellow line. What's the yellow line? The halving, right? So in both prior cases for Litecoin, it topped out before its halving, which is interesting because normally Bitcoin has gone, tends to do well after the halving. Now, of course, it could be more so related to QE and other parts of the business cycle than just the halving itself. But what we've historically seen with Litecoin is a fairly aggressive move. And for reference, in 2015, Litecoin topped out in July. And in 2019, it topped out in June. And in both cases, the halving was in August. Now, I think the projected halving for Litecoin is supposed to be early August. So you still have about 2 months. It's hard to know exactly how high it's going to go. I'm not chasing it. I've been actually bullish on it for a while, at least on the not publicly, right, but in the premium stuff. But yeah, I mean, I think that it's sort of coming into this range up here where it's likely going to find some type of a final high before it fades for a while. And that's not to say that it has to fade forever, but it could fade for, say, like the rest of this year, early next year, and then maybe start a fresh move sometime in like late 2024 or 2025.
Interesting. So do you play these as trades? Like, do you actually play these, or is it kind of like you just watch them and analyze them?
Yeah, sometimes I do. I mean, when I did it in 2019, I didn't actually acknowledge it until around the halving. Actually, I mean, I started my YouTube channel actually in June, and I made some videos on Litecoin, and I was actually pretty bullish on it throughout this phase. But that was kind of when I recognized this pattern of like it rallies in the first half of the year of its halving year, and then fades for the second half of the year. And because I think that is probably one of the things that gets it moving. And of course, like as you said, it could also be the SEC stuff, right? It could be that people are speculating on it not being a security, like Bitcoin. That could be where some of that's coming from. So I think my best guess is that it could go higher, right? Like it could go higher. Who's to say when you see this type of momentum, right? It's hard to know exactly where it's going to stop. But normally it stops with a blow off top. And then what I would look for is are you starting to see it fade in late July, just before the halving? Because that's what it tends to do. And if you see that, then I think there's a case to be made that it could just follow what it did the last 2 times.
What are your thoughts on where Bitcoin is like come year end? I mean, have we seen a big move up back to 50,000, 60,000? Is it going to be right in this range? Is it going to be heading lower? Do you have any stats on where that could be?
The main thing I've looked at is sort of just like an average of 25. I mean, look, if you look at 2022 and you take the average of 2014 and 2018, I know this stuff can sometimes seem somewhat silly, but again, like, the 2022 ended the year basically where the average of 2014 and 2018 ended the year. And so, I was curious, like, could we see something similar for 2023 where it's sort of following the average of 2015 and 2019? And so far it has, right? Like so far it has. And if it continues to follow it, then it means the upside is going to be capped out somewhere around 35K. I'm not saying it has to go there, but that would be where I would imagine the upside could be capped out. And then you could see that fade in the second half of the year. I mean, if it follows this average, it would mean ending the year up maybe 60% above the yearly open, which I believe would put it, like at 23, 24, maybe, no, I think these lows would be like 23K. So like if it fall, that would be back to 23s, maybe like 24, 25K. But that doesn't mean that you can't get that secondary scare, right? Like a recession scare. And I think that's probably going to happen at some point. I don't know if it's going to happen this year or if it'll happen maybe early next year. Again, last cycle, Bitcoin found its higher low, its macro higher low in, what was it, in March of 2020. This was sort of when the macro higher low was found. In the cycle before, it was found, the double bottom was found in Q3 of the pre-halving year. And by the way, here's an interesting thing. It was actually in 2015 where Bitcoin, it rallied up here in June and July, and then it got a 50% correction in August. What's interesting is that this 50% correction put in a double bottom. A 50% correction from 31K would put it back at 15.5, right? So basically theoretically a double bottom. So I'm still of the opinion that we're not going to new highs this year. Okay, I mean, I haven't gone into that camp of new highs or anything. I do think that Bitcoin it likes to climb the wall of worry in the pre-halving year for about half the year, and then we normally see it fade after that. So I would expect us to at least revisit some of those lower prices at some point later this year.
Yeah, and I mean, just sentiment alone, I mean, it's pretty remarkable, the crypto sentiment right now, specifically in regards to Bitcoin. Seems like anyone that was on the alt train has now moved into the Bitcoin train, and it's just, it's pretty wild out there right now in terms of bullish sentiment. And I would say, like, so I see a question here about, I talked previously, like over the last year, that Bitcoin could potentially decline by as much as 85%. That data point came from past cycles about how much it dropped in each of the past cycles. It was somewhere around that. I actually think that it also has to do with how much of a decline we saw in Amazon. If this was the .com bubble bursting in crypto, it was also looking at Amazon as being kind of the child of the .com bubble, and Bitcoin obviously being the one for crypto. And so if you look back at Amazon back in 01, it bottomed out down about 85+% when all was said and done.
I have this thinking here about, like, what if we remove Bitcoin from the rest of the market and assume that, what if the altcoin market is following what the .com crash did, Because I think there is, I'm not saying that Bitcoin can't go down. In fact, my base case is that we will have it either be a higher low, a double bottom, or a lower low at some point probably before the next halving. But if you look at, say, this is what you were looking at, right? So the Bitcoin percentage drawdown from the all-time high, you can see that this is what it currently looks like right now. I mean, the last cycle, yeah, I mean, you can see that it went down, like 80, 85% or so. It tends to be. And so far this time, it's gone down about 77%. But there's this interesting thing, like I was looking at, like, if you were to look at the NASDAQ back in what, so 2000 to 2002, one of the interesting things is if you take sort of this trend here, right? If you take just that and you copy that over to Total 3, which is, again, so Total 3 is just the altcoin market for people who are unaware. You can actually see that it still does look somewhat similar. It's not a perfect replica of it, but like if you were to just take that pattern that we were just looking at for the NASDAQ and just sort of paste it over what Total 3 has been doing, like there are definitely some similarities in some of these moves, and I think that you could see it play out in a similar way where this last move to the downside by the NASDAQ, right? So like it put in a low, and then it put in a lower low, and then it almost put in a new low right here, right? Almost in May of 2002. But then instead it rallied back up another 18.5% before finally finding that final low in October of 2002. And right now, Total 3 off of this most recent low, which was almost a lower low, but not quite, is up about 16.5%, right? So again, it's not to say that it has to play out the same way. If history has taught us anything, it's that it probably won't play out in the exact same way. But I still can't help myself to remain bearish on the altcoin market. Not necessarily just because of USD valuations, but look at this chart. This shows you total 3 minus USDT divided by Bitcoin. I mean, to me, it just looks like an oscillator at best, right? I mean, so
Yep.
What is the path here? I mean, I don't know if it's gonna bounce here for a little bit, but ultimately, this is another 40% drop, to get back down to these range lows. I mean, could it find some short-term support here in this range as it has bounced in this range before? Sure, but I ultimately think the altcoin market could bleed another 40% against Bitcoin.
Wow. With Bitcoin potentially, so if you had to guess, and again, based on the data that you're seeing, is it more likely that the lows are in on Bitcoin, or is it still 50-50, or what are your thoughts?
Yeah, I mean, I still think it's sort of a toss up. I mean, I basically what I've said before is 60-40. I think the reason why what I would be looking for essentially would be a resolution of the yield curve and then see what happens, right? Like, is it a higher low? Is it a lower low? Or is it a double bottom? At that point, I'm willing to say whatever it is, like that's it. Last cycle, it was a higher low. The cycle before that, it was a double bottom. Could this time be a lower low and be different than the prior two times? It could be. It depends on how bad things ultimately get once we get on the other side of all this yield curve stuff. I'm guessing I know you've called for 12K. Are you still in the camp that it could easily see 12K?
Yeah, I am. I'm still now. I do think that some of the positives, like regulation and stuff like that, and money flowing into Bitcoin, as if we get a spot ETF, could adjust that. But for me, it's just it doesn't seem like we've had. To me, we never had the flush out in crypto. And granted, that could be more in the alts, but bear markets notoriously get people to throw in the towel. We saw it in 2017, going into 18 and 19. I still remember so vividly, and I follow, I watch CNBC as I'm stock trading and stuff like that. And I still remember 2017, the ticker of Bitcoin was at the bottom. They always talked about it. And then by 2018 into mid to late, they removed the ticker and didn't say a word. And at that point, you had Bitcoin below 10K, it was in the 76543 level. And it just was like, no one even, like, people were questioning whether it would survive. And maybe this time's different, but to me, we haven't seen the washout yet. You still have, you go on crypto Twitter, people are just as bullish as they were at 69,000 at this point.
Yeah, I mean, look, you could have a big washout by Bitcoin, and it could be a higher low, right? Like, I mean, like even going back to 17 or 18K would probably scare a ton of people,
Yeah, I agree with that.
And here's another idea too: is you could have a scenario where total market cap goes and puts in a new low, but maybe Bitcoin doesn't, right? Because, like, look at it like this. You know how Bitcoin just put in new yearly highs at 31.4? Total market cap hasn't, right? So to me, what this still continues to suggest is that not maybe the only reason, but one of the main reasons that Bitcoin has gone up is because we've just seen a rotation of capital from altcoins to Bitcoin, right? So you could have a scenario where Bitcoin puts in a higher low, maybe total market puts in a double bottom, and then altcoins put in a lower low, right? Where the further you go up the risk curve, things get wrecked incrementally more. So there's a potential for that to happen as well, I think.
What are we talking in terms of, like, economics? Like, I've been following, for instance, the ISM data this morning came out, and it was, I think, the worst ISM number since May of 2020. And remember, in March was COVID. So, I mean, you're not it wasn't like that was a great month, even the following couple of months. So ISM data has come in pretty weak today. We saw some decent numbers. I think the media was really harping on GDP, but you and I were discussing this before going live, and GDP being revised up to 2% could very well likely be the fact that inflation caused prices to pop, and people still have to buy what they got to buy, right? I mean, people are now going into their debt more and more. Credit card debt is now above $1 trillion. And so did GDP just come in at 2% because of inflation,
No, I think there's a case to be made for that. I think that's why inflationary cycles are so difficult, because it can often mask actually what's going on underneath the surface. Yeah. It might seem like companies are doing exceptionally well when the only reason they're doing well is because they raise prices, and the people that can still afford to pay it will pay it, but maybe the demand has actually gone down overall. It's just that you have fewer people buying these things, but because the prices are higher, they can still sort of make it look like things are okay for a time being. And then sort of the reverse is also true. Like if places are lowering prices, like Tesla, and because they're trying to compensate for lower demand. In the short term, it can lead to, you know, more sales with lower prices, right? But if demand continues to wane as we get further into the tightening cycle, there's only so many times you can cut prices and stay profitable, right?
Yeah.
So that and by the way, there's plenty of other ways to look. I mean, so this is GDP, and you're right. I mean, like GDP has been going up. But other things like, you know, gross domestic income, which is something economists also look at. If you were to look at the inflation, so if you were to look at real GDI and look at a quarter over quarter change, I mean, it's been negative,
Yep.
right? So, and one of the things that some economists look at is the average of these two. And you can see if you look at it like that, it's basically just been oscillating between negative and positive essentially ever since early 2022. So
Yeah, and I think, I mean, one of the charts that I was looking at here is if we go to the chart of real gross national income, and I think one thing, there's been a lot of questioning of whether or not we're going to see a recession or not, or is this going to be like the perfect soft landing, like Jerome Powell's trying to talk it up, the media is trying to talk it up. And I do think it's important to recognize that historically you've never had no recession if you've had real gross national income go negative. And here's a chart just showing it right here, and here from 2020. But also, if we go back to even further, we can even go back to, and let me zoom in a little bit on this, but we can even see going back to 1950, there's always been a recession when this has ticked to the negative side. And so for if perchance we don't get a recession, this would be the first time ever, essentially, we haven't had a recession when this has happened.
Yeah, I think the thing is like, could this time, anything's possible, like things can be different, right? But it doesn't mean that you shouldn't plan for the most likely outcome, which is what has normally happened, right? One of the things that I continue to look at, like I've looked at probably 200 macro indicators in recent months, and I would say more than half of them suggest we're in a recession. Probably like 25% say everything looks completely fine, and then the other 25% says that we're heading towards a recession, right? Like, so it's not here yet, but we're likely heading in that direction. But one of the things that I think has kept us from going into the one is just the labor market. And one of the reasons why I think the labor market has been so resilient is because look at total non-farm job openings. Like, it has been trending down, but it started at such a high level, right? So the last year has only accomplished getting us back to trend, right? So this was the prior trend. That the last year in job openings, this pullback has only gotten us back to trend. Look at what happened in March 2020 when we went below trend, right? Like that was where we went into a recession. Now, of course, that was like it was completely unexpected by a lot of people, but it doesn't mean that you can't go into a similar process where it's a lot slower, right? It doesn't, I think a lot of people think that things have to happen tomorrow or it's not going to happen.
Right.
This could just be a very slow process. So I think the risk for the US economy is more so in what happens if this actually goes below trend, right? And if job openings continue to fall, then you could finally see sort of the labor market finally roll over. And if you look at like job quits, it's going down in line with what we've seen in recessions, right? Like if you look at a year over year percentage change, it looks recessionary, right? I mean, it looks like what we've previously seen in recessions. But again, it's one of those things that until you see initial claims sustaining 300K, 400K, something like that, the labor market, can remain resilient, and markets love climbing the wall of worry until it finally starts to turn.
Right. I always say the markets don't care until they care, and then once they care, they freak out. But
they don't care about anything else once they finally care about it.
Exactly. So I think going to what you said about labor market in terms of people quitting, right? That shows you that when they don't feel super secure that they can find another job, or a job paying them equal amounts, they're less likely to quit, versus what we saw in 2020 and 2021, where people were like, hey, I could find a better job, no problem. And they ran out and they did that. So you had a lot of people quitting back then versus now it's starting to decline much, much more.
Right. And here's one of the indicators, just to sort of cover our bases. Here's an indicator that says we're not in a recession, but it's one that sort of says that we're trending in that direction if things don't change, right? So like this is the year over year percentage change of the Coincident Economic Activity Index, which takes into account four things: non-farm payroll, average hours worked in manufacturing, the unemployment rate, and real inflation adjusted personal income. And right now, the year over year percentage change is at 3.65%. if you roll back the clock, you'll see that it was still a little bit lower than this in 1990 before it rolled into a recession. In 2001, it had to get down to a little bit lower than 3% before we got into a recession. And in 2007, right, it had to get below 3% year over year before we were in a recession. And so it could just be that we just need to keep waiting, right? Maybe 3 months, 6 months. I don't know how long it's going to take. But this is one of those indicators that doesn't necessarily agree with all the other indicators. And it says, you know what? Like, things are kind of bad, right? Things are trending in the wrong direction. But because there was so much excess created from all the money printing and whatnot, it's just taking the business cycle a long time to play out.
And I think that makes a lot of sense. I have a chart here of excess household savings, and we can see that you had this massive increase in savings in the COVID right in that beginning portion of COVID, and still it's coming down, but it's still working its way through, right? It hasn't, because people had so much savings, they're able to withstand and still continue to kind of buy things. But the other question then becomes is, as inflation, continues to take its toll, does that then weaken the consumer even more? But yeah, interesting chart there showing the surge in savings and then kind of the fade on it as it's coming back in here.
Why don't we head back over to the S&P? I'd like to get your thoughts on that, because as all this money, as everything sort of slowly dries up and trends in the wrong direction, again, we know the market likes climbing the wall of worry. From a technical perspective, what are you looking at on the S&P right now? Because I mean, and I think even in the title of the video on your channel is about all these divergences and whatnot.
Yeah.
What are you looking at with the S&P?
Yeah, I mean, the divergences are shocking, actually, how many different divergences we're seeing. Just based on purely the S&P chart, what we have here is you can see this upsloping trend line that actually goes all the way back to the COVID low. So if you take that low and you run it right through here to these highs, and it matches basically perfectly with these highs, we actually kissed that high right here before the latest pullback in the S&P, which was about a one week long pullback. And then what we're seeing here is we're rising again towards that same trend line. So I would expect that trend line, if we hit it, let's say later this week, it's not that much higher. I think it's about 20 to 30 points higher on the S&P 500. That'll be your next big resistance level. But again, for me, it's kind of looking at this, and I don't know if you have a chart on this, and maybe I should have given you a heads up, but I was wondering if you had the S&P 500 minus the top 7, the Googles, the Apples, the Microsofts, the Nvidias, and it would be fascinating to look at this year. What's the actual return on the S&P if you take out 7 stocks? And I could be wrong on this, but I think the return is probably in the range of 3%, maybe less.
I don't have the chart handy. It might actually exist on TradingView somewhere. I'm not really sure, but I don't have the chart handy. It could be something I look into getting, because again, like look, we've all seen the Twitter posts make their rounds where they show how like only 7 stocks have actually contributed to most of the move.
Yeah, but in all fairness, you look at some of the market, the disparity in market caps. And again, what I'm showing here, guys, is this is the tech stock sentiment. And so the last time we were this high on tech stocks was in the .com bubble. And so you basically, now there you were higher. It did go higher than that quite a bit when the .com bubble hit. But just interesting to see that we have not been that high going all the way back to the .coms. And the one thing I would just say in regards to these big cap tech is that they have become so mammoth in terms of their market cap relative to the rest of the market that now you have the NASDAQ 100, and basically 50% of the NASDAQ is these stocks. The S&P is about 25+%. And so the reason why that's a concern, because when things are good, it's great, right? It takes the whole market up with it. If you're in an index fund, you're doing great. The problem is that if these things correct, and if you look at historical PE ratios, and this is something that a lot of people don't kind of realize because they're newer investors, but when I was growing up in the 2000s to 2010s and I'm just getting into trading, in a recession, the general PE ratio for a large cap tech was 8 to 10. Well, you have Microsoft over 30, Apple at 30. There's a lot of froth there because these stocks have been utilized as kind of a safe haven, and they've become so dominant that, again, there's a huge risk there. If all of a sudden those stocks come in, the market could go down 20% in a flash.
I think a lot of people, I think markets have just been addicted to QE for so long that when you take it away, it doesn't mean that the market is immediately going to accept, what that means, right? That people are going to fight it for a long time. But you do slowly see some of that stuff dry up as time goes on. Were you pulling up the QQQ here?
Yeah, this is the Qs, and so the interesting thing with the Qs is just like the S&P. There's another trend line here, and what we can see is there's a channel, right? So I'm a big fan of somehow the markets make sense out of chaos, right? So generally people look at charts and they're like, "What the heck is this?" It looks like a bunch of squiggly lines. But if you look at the low end here and you take this low through these lows, we actually just and you take a parallel from this top, you can see again, where did that pullback on the NASDAQ 100 occur? Right at that level. And if you look at where we're coming into now, we're kind of right back up into that level. Then you look at this pivot top right here, and we have that factor as well. And I think I showed this last time, but it's just such a fascinating thing for me to look at, is that if we look at the NASDAQ 100, or excuse me, the NASDAQ composite, last time I believe I talked about how the pullback, let me see here. Yeah, I believe this is correct. So if you take the low to where we currently topped out, look at that. So we dropped 37% and change, and we have rallied back 37% and change on the chart. So if you look at past cycles, the .com did this, where almost identical before it rolled over in the .com. I think the NASDAQ fell. And in fact, let me go back and we could just take a look at this here. Let me go to the weekly.
Yeah, I think it was like 40 and 40, right?
Yeah. So that. This is by the way, this is the financial crisis, and it wasn't as much tech related. So again, you still had the same sort of bounce, but it wasn't equal. It was 18% versus a 23% drop. But if you go back here, I mean, this is again just freaky stuff. You had a 41% drop, 41% rally before the rollover. So it's very fascinating to look at the NASDAQ and be like, wait a minute. So we fell 37% and change. Now we've bounced 37. And now all of a sudden the NASDAQ's starting to struggle a little bit. So just cool stuff.
One of the things that I've thought about as well, because I mean, like we know we have an inverted yield curve, right? Mm-hmm. And there's periods in history where even during an inverted yield curve, the market can rally to new highs before the uninversion process starts, right? It's like, I think there are times where it has happened. There's also times where it hasn't happened, right? I feel like for every time that you can find a new all-time high was found during the inverted yield curve, you can find another example where we didn't find a new all-time high. So it's kind of a toss-up as to whether that happens or not. But one of the things I was looking at is this idea of net liquidity. And I'm not the creator of this concept by any stretch of the imagination, but I did just code up a trading view indicator to sort of map this out. And I thought, hey, this might be something useful for people to take a look at. So what I did here is I essentially added up the balance sheet of a lot of central banks. So it includes the United States, Canada, Australia, New Zealand, the ECB, UK, China, and Japan. And that, to me, gives a pretty good approximation of overall net liquidity. It's not to say that there aren't other central banks that provide liquidity. It's just that those, I think, provide a majority of it. And then also I subtract out the TGA and the reverse repo. So by doing that, I think we can approximate net liquidity. And what's interesting when you look at this chart is that, the lows that we had in October sort of correspond to the lows on net liquidity. Again, this is not based on the S&P at all. It's just based on assets held by central banks and the reverse repo and the TGA. And then the next low in December that was a higher low also corresponded to a higher low on net liquidity. And then the next low, which was a higher low, also corresponded to a higher low on net liquidity. What's fascinating is the jaws have opened up. Right. And what I mean by that is now you have the S&P going up while net liquidity is going down. So if you overlay these charts, right, so you can see it pretty clearly here, right? So you have net liquidity going up, the S&P going up while net liquidity is going down. And I think the question is what does this mean? Has this ever happened before? And the answer is that it has. And you don't even have to roll back the clock that far to find times where you can see the same thing playing out, right? So in 2018, we had the S&P climbing the wall of worry and net liquidity going down. What's interesting is the S&P climbed the wall of worry from April until October, and it put in a new high. But guess what? That new high did not mean that low was safe, right? So like that low ended up being taken out. Now it was taken out, like half a year later, but it was still taken out. What's interesting again is that the jaws opened up again just after it, right? So the S&P rallied from there into early 2020 while net liquidity trended down. And then even the December 2018 low wasn't safe, right? So like every single time, like we made new highs, but it didn't mean that the prior low was going to be held. And so that's what I think you have to consider, especially in inflationary cycles. I mean, in and I know you probably know this better than anyone, but in the 1970s, what happened with the S&P? It was a series of higher highs and lower lows. And this went on for a long time, right? Look at this. Like we had a high, a higher high, and a higher high, but we also just kept putting in new lows. And so there is a chance that you could see something like that play out as well, right? Like and that was why I was wondering, like could the S&P go put in a new high before it puts in a new low? And I think during inflationary cycles, it might not be the most likely outcome, but it is at least an outcome that could occur.
There's a possibility. There's no doubt about it. And again, you look at the liquidity that is still on the sidelines in there, and if that liquidity gets drawn into the market, absolutely, it could do that. Yeah. Yeah.
Right. Yeah. So I'd be curious if that happens. I guess it depends on when the labor market rolls over and if inflation comes back.
And then, just for me, when I look at that chart that you have up right here of the S&P, I immediately think of Bitcoin in the last cycle where we had that big drop in the middle, and then we went to 69, which just pierced that previous high by $4,000 or so. And then we saw the bigger move to the downside. And again, you could see how, you could see how that could potentially replay there.
Right. And I also think people should be aware too that like, just because the S&P puts in a new high doesn't mean that your altcoin has to put in a new high, or even Bitcoin for that matter. I mean, like, the S&P put in a new, so the S&P topped out in January of 2018, and then it was putting in higher highs by Q3, right? But Bitcoin was not. And also the S&P was putting in this high in February of 2020, but Bitcoin was not, right? Like Bitcoin still wasn't putting in new highs. So I think what it is the further you go up the risk curve, the harder it is for those assets to put in new highs when the macro conditions get worse. So like, you could see scenarios where less risky assets could put in new highs. Even like Nvidia. Nvidia has put in new highs. But you could see a scenario where certain assets put in new highs, but that doesn't mean that all assets, necessarily put in new highs. And that's why I think people should be careful with the altcoin market, because even though the altcoin market will likely recover at some point as a whole, it doesn't mean that your altcoin will. It just means that the market maybe it goes into new altcoins, not the relics from the last cycle.
Yeah, very true. What are your thoughts on, and we'll wrap it up in just a couple minutes, but the inversion of the 2 and the 10, it's now over 1%. Does that concern you? Do you think I think I was reading that most inversions fix themselves within around, 12 months or so. But there was, I think I don't remember when it was, but there was one point where it was like 22 months of inversion.
Yeah, like here in the 1980s, so this is the inversion of the 10-year and the 2 years. So here's a point in the 1970s, 1980s. So like we first saw inversion in August of 78, and we didn't get uninversion until April of 1980. So it was almost 2 years. But note that the recession started before the uninversion process occurred. And I think, again, during inflationary cycles, that can happen because the Fed can remain hawkish for far longer than they otherwise would, right? If inflation were at 2% right now, the Fed would likely not be raising rates, right? Like with so many different things slowing down. It's just that inflation is so high that they're trying to do that. So yeah, you can see there are periods where it did take closer to 2 years. The last couple of cycles, it obviously didn't take nearly that long. Like in 2000, it inverted in February of 2000. We got the uninversion basically 1 year later. In 2006, there was a brief inversion in early 2006, but more of a sustained inversion coming in the summer of 06. Didn't uninvert until about 1 year later. And then this time around, we can see the 210 inverted there was a brief inversion in April, but again, I don't really think it counts so much if it just pops back up. First real inversion, sustained inversion occurred in summer of 22. So we're about 12 months out from that, right? So look, I think what happens is that a lot of people get, they see the recession is likely coming and they think that it has to be like immediate. But just because it hasn't happened in 12 months, right, doesn't mean that it can't come. I mean, again, like if you had thrown in the towel on the idea back over here, like you would have done it right before the recession actually occurred.
Yeah.
So I would say that it's important to recognize that business cycles do take a long time to play out, and it could be 12 months from inversion, it could be 24 months from inversion, but we are definitely within the window now where it could uninvert based on history.
So just as we wrap it up, so later this week for everyone watching, we have durable goods orders on Wednesday. So that'll be Wednesday at 10 o'clock, 10 a.m. Eastern time. Factory orders also there. FOMC minutes will be out at 2 o'clock on Wednesday as well. So again, FOMC minutes, which basically the minutes, it's supposed to be the minutes of the last meeting, but usually Jerome Powell, the minutes are a way for them to communicate what they want the market to think, right? So they can change little things in there, how hawkish they are, how dovish they are, just a little bit there. And then really the big one is going to be Friday's jobs number. And I think I would end on that is, do you have, are you going for the labor market stays just as strong as it does? It's, it's been beating the numbers recently, or do you think we start to see a crack?
Yeah, I don't know. I mean, like I feel like what my sometimes like what I think will happen is not always what actually happens, right? Like,
Yeah.
But like fundamentally, it makes sense that everything's weakening, right? But I also know that the labor market has been incredibly resilient, and I think my general thought process here is that like we should see initial claims slowly trend up, for many months to come. I don't know that like we're going to see any massive surge in the unemployment rate in the next 1 to 2 months, but I'm guessing that by Q4, Q1, it could finally start to go, especially going back to that job openings thing that we were looking at, how it's now back to trend. So
Right.
if that just continues for 3 more months or 6 more months, like we would have to be below trend at that point, I would imagine.
Yeah.
So I think there is still reason to.
And I do think it's interesting. We had jobless claims for 3 consecutive weeks coming in at 260,000, which was sharply above what was prior. I think we were around the 215 level. And then last week we got jobless claims coming back in around that lower level. But I would just point out to people that oftentimes around holidays, people say, even if they lose their job, they say, you know what, I'll file, I'm going away with my family, or I'm doing this. And so they tend to wait to file maybe a week or two until that holiday is over. That happens really around Christmas as well. You'll see a drop in jobless claims because of that as well. So be curious to see, maybe it'd be interesting to see this week. I don't know if this week will change much because it is a kind of a holiday week, but next week would be big on jobless claims to kind of follow that number.
Right. One last thing, and I think we should wrap it up, is I just wanted to remind people of continuing claims. So like if you that's the other way to look at it as well.
Mm-hmm.
Back in 2019, it also was kind of trending down during this time frame. And again, we also had an inverted yield curve where continued claims started to go up. They bottomed, from memory, they bottomed in September. So you could see it as you were talking about, or sort of see point right now where it might not be reflected the best, but I would guess that by that September timeframe going into the end of the year, we're going to see these things start to tick back up. But Gareth, it's been a pleasure doing this again. We've gone here for about an hour. I'd love to keep going because ever since we came on the air, the dominance has gone from 51 to 51.2. And maybe people have thought about these altcoins, but I think we should go ahead and wrap it up. And again, guys, if you're not following Gareth and you're on my channel, make sure you go follow him. His Twitter, his YouTube.
Same thing, guys. If you're watching, go follow Ben. His data is amazing. What I think is amazing is the combination of us coming together, and we're going to continually talk about even improving what we're doing here or bringing new offerings to you guys as well. So follow YouTube, Twitter, every place you guys can find us. We're going to make sure we get you guys the best information we can.
Yep, definitely agreed, and look forward to seeing you guys next week.